Hey, today, I'll talk about the importance of the notes to the financial statements. Don't forget to share this video with a friend that it's eager to learn as much as you. Moving on to the notes on the financial statements, or as sometimes named, footnotes. Notes to the financial statements are not considered a financial statement, but they are an important and integral part of the financial statements. This is true for public corporations who must use IFRS and private corporations who choose to use IFRS. Failure to read the notes to the financial statements will result in incomplete knowledge of the company's financial health. The notes supplement the financial statements, and, without them, it's not possible to fully understand the financial condition of the company. Here's an example of how the notes are displayed on the income statement. The notes to the financial statements, which are displayed as a reference, informing the readers at the bottom of the financial statements, should be considered as part of the financial statements. The notes provide additional information, such as disclosures of significant changes in items. First, you will find the basis of preparation note, where there's a statement of compliance, indicating, for example for a public company, the use of International Financial Reporting Standards, known as IFRS. IFRS are a set of accounting rules for the financial statements of public companies that are intended to make them consistent, transparent, and easily comparable around the world. Usually, following the first notes in the series, there's a summary of significant accounting policies and rules used to prepare the financial statements. This note will include such things as the basis of measurement for specific financial assets and liabilities, and how property, plant and equipment is valued, followed by many other items. Here, we can find what is the basis for accounting to prepare the documents, and the methods used to report amortization and depreciation expenses. The rest of the notes explain in greater detail how the figures have been calculated. This gives the reader the information needed to do a deeper analysis. Other notes that may also be includes any disclosures that are required by specific standards or notes about items that are not listed on the statements, such as exposure to significant risks. On the following example, let's check your understanding. A company named StockRox announced a 5% increase in their annual dividend on January 2, 2021, and the declaration was made after the deadline for the financial statement, on December 31, 2020. Should this information be reported? If yes, where? On the statement of changes in equity? On the statement of financial position? Or, in the notes to the financial statement? Although the increase in the dividend was announced after the date of the financial statements, it is considered as an important subsequent event for the users to better understand the financial health of the company, and it needs to be included in the notes. It's clear that the purpose of the notes are to 1. Expand the information presented in the financial statements, 2. Disclose the qualitative and quantitative information that are not seen as obvious on the financial statements, and 3. Ensure that a company publish a full disclose of information needed for decision-making. If you have want to keep on learning and still did not subscribe to the channel, you can do it today by clicking on the subscribe button below. Thanks for watching and I will see you again soon.